Hello everybody, welcome back to our channel and thanks for tuning in. If you follow this channel, that might be because you are considering to invest in gold and like physical gold in forms of coins and bars. As we display nice gold coins and bars, we can talk a little bit about gold's performance in 2021. Starting with the 1 kilo Pamp Swiss gold bar with the very iconic design of the Lady Fortuna that is manufactured by one of the best and most reliable mints in the world, the Pamp Suisse. If you are not a big investor and if you do not have a gold dealer with a buyback program, I do not recommend you to buy gold bars bigger than 100 grams. Anything bigger than 100 grams of gold could be difficult to sell. It's much better to have 10 bars of 100 grams than 1 kilo gold bar. The Lady Fortuna comes in a variety of sizes from 1 gram up to 1 kilo. So if you like the design, there's a variety of sizes that you can choose from. But talking about gold, like me, you might be disappointed with gold performance in 2021. As everyone expected the price of gold to go up, with all the money printing, the price of gold is down 5% year to date. Not to mention that gold has been traditionally a hedge against inflation, but gold currently is not yet reacting to inflation numbers that we are seeing month after month. In his podcast, Peter Schiff said the gold price did not go up because the markets and investors believed in the Federal Reserve when they say inflation was transitory. But month after month, we see that inflation is not going away. Furthermore, once prices and wages go up, it's almost impossible to bring them down. Here we have the 1 ounce gold Britannia bar, in my opinion the most beautiful gold bar that I own, and it's quite thin, so it looks much bigger in diameter than other 1 ounce gold bars. Now, this bar is also being produced by the Royal Mint in smaller pieces such as 1 gram and 5 grams. In his last speech, the chairman of the Federal Reserve, Jerome Powell, admitted that inflation numbers are much higher and more persistent than the Federal Reserve has forecasted. In addition to that, the St. Louis Federal Reserve President James Bullard said, "Inflation is here to stay and we must get used to it." This statement goes against all previous statements from the Federal Reserve that repeatedly said inflation was transitory and the Federal Reserve would not allow inflation and they have all the tools to fight inflation. Well, clearly there is one tool to fight inflation, which is rising interest rates, but that would destroy the economy. Rising rates right now would make the US debt even worse and would be much more expensive just to service the debt. So this is not an option. In fact, the Treasury Secretary of the United States was running around begging the Congress to increase the debt ceiling, otherwise the US would default. So imagine paying this debt at a higher rate of interest. It's just not an option. So maybe for this reason the Fed officials are not saying anymore that they have the tools to fight inflation or that they want inflation to be at 2%. In fact, inflation is already more than double of it, and there is nothing that the central bank can do about it. The fact is, inflation is already 5%, and if the Fed could really fight inflation, it would be doing right now. Why the Fed would wait for inflation to get even higher at 7%, maybe 10% to start fighting it? That doesn't make any sense at all. Other points that people are not paying enough attention is that if inflation is already 5%, even if the central bank raises rates to 4%, then the real rate would still be negative. So the only option to pay the debt is devaluing the currency. By devaluing the currency, you also devaluing the debt in particular currency, in this case the American dollar. And again, inflation traditionally increases the price of gold. So inflation is here, it can accelerate, but still the price of gold is not going up. It should, but it's not going up. I could give here many excuses to justify why the price of gold is not going up, but the reason is unclear. Your guess is as good as mine. What is clear to me is that gold and silver have a lot of catch up to do. In my opinion, and this is not trading advice, gold is cheap and undervalued at the current price. I believe we will not see gold price this low for a very long time. At the moment, gold is in a flat line. I cannot tell you until when the price of gold will be paralyzed and consolidating, but I could be wrong, but I assume that the current price of gold is just a launching pad for higher prices. Gold bugs such as Jim Rickards and Mike Maloney are saying for over a year that when the price of gold starts moving, it will not stop and you won't be able to get it. On the past 12 months when the stock markets had pullbacks, gold prices did not suffer too much. So my position in gold allows me to take more risk in other types of investments as I feel that my money in gold is safe. Based on cycles of gold price and based on the Dow to gold ratio, I still forecast that the peak in gold prices will be between the years of 2026 and 2027. I have a video about the Dow to gold ratio. If you want to watch, you'll find the link on the description of this video. At the moment, we are facing the money illusion. People see the prices of food, housing, fuel, art, all prices going higher, and rather than understanding that our money is devaluing and we need more units of euros, dollars, pounds, whatever, to buy the same amount of goods that we would need 2 years ago. The signs of economic bubble are everywhere. An Italian artist sold an invisible sculpture for $15,000. Can you imagine? $15,000 for an invisible piece of art. The piece of art in fact does not exist, but somebody was willing to pay $15,000 for that. Other example, used sneakers from an NBA player was sold for $1.8 million. In fact, this used sneakers was bought by a former NFL player, and now he wants to make a security out of these shoes, so you can buy a share of these used sneakers for $15. The sneakers is basically becoming a small company that does not produce anything, but people would rather have a share of a used sneakers rather than cash in a bank. This is caused by too much money in the system looking for a place to park. But when liquidity and central bank stimulus dries up, people take their cash back from nonsense investments and the house of cards will collapse. Now, no one can say when. Next week, next month, next year, nobody really knows when. Today, investing bubble looks a little bit like the tulip mania in the Netherlands, when a single tulip flower would cost the same as a year's salary of a skilled worker. In some cases, a tulip could cost as much as a nice family house. The signs of a bubble are all over the place, not to mention cryptocurrencies. Don't get me wrong, I have a small position in cryptos. I speculate and I take advantage of the price volatility. Whenever Bitcoin drops 30% or more, and trust me, it happens quite often, I add a little bit of crypto to my wallet. My point is, when everything looks like a bubble, gold and silver that have inverse correlation with most financial assets and are far from all-time highs don't seem to me to be in a bubble, and seems to be a safe place right now to park a small portion of your cash while waiting for the crash to come. On the week, spot gold reached $1,800 per ounce on Thursday. Unfortunately, gold gave up most of its gains on Friday, closing the week at $1,767 with a small weekly gains of 0.67%. Spot silver is currently priced at $23.28 with weekly gains of 2.76%, far better than gold. Platinum, which is the most undervalued precious metals, is currently priced at $1,057 and had weekly gains of 2.86%. This will complete the video for today. Thanks for watching, protect your wealth, stay safe, take care.